Hey everyone, welcome back to Stocks for Beginners. Today we are diving into value investing basics. A lot of you might think investing in stocks it's like gambling, tossing money into a slot machine, hoping for a win. But what if I told you it's more like shopping for your favorite clothes on a big discount? Stick with me and I'll show you why value investing is not gambling and how it can be a smart, patient way to grow your money. If you are new to investing, you might be scared that stocks are risky, like betting on a game. That fear stops a lot of beginners from trying, or worse, pushes them to make risky choices, like chasing hot stocks without a plan. But here's the truth, value investing is a proven strategy that's all about being smart, not lucky. It's how legends like Warren Buffett build their wealth. So let's break it down in a simple way and clear up those gambling myths. So, what's value investing? Imagine you are at a store and you see a jacket you love. It's normally $100, but today it's on sale for $50. You know it's a great deal because the jacket is high quality and worth way more than $50. So you buy it, knowing you got a bargain. That's value investing in a nutshell. In the stock market, value investing means finding companies that are like that discounted jacket. Their stock price is lower than what the company is actually worth. You are not guessing or hoping. You are doing your homework to find businesses that are strong but undervalued. Warren Buffett, one of the greatest investors ever, said it the best. Price is what you pay. Value investing is what you get. When you buy a stock at a price lower than its real value, you are setting yourself up for success, not gambling. Now let's talk about why so many beginners think investing is like gambling. The stock market can feel wild. Prices go up and down every day, and it's easy to panic. You might hear stories of people making quick money or losing it all. And that sounds like a casino, right? But here's why that's wrong. Gambling is about chance. You roll dice, spin a wheel, and there's no way to predict the outcome. Investing, when done right, is about research and patience. Value investors don't just pick stocks randomly. They study companies, look at their earnings, products, and future potential. It's like checking if that discounted jacket has any holes before you buy it. Another reason people get confused is because some investors do act like gamblers. They chase hot stocks, buy without research, and trying to time the market. That's risky, and it's not value investing. Value investing is about sticking to a plan, not flipping a coin. So, how do you actually do value investing? Here are the key steps in simple terms. First, find good companies. Look for businesses that are strong. Maybe they make products everyone loves, like iPhone or Coca-Cola, or have steady profits year after year. Warren Buffett loves companies that are easy to understand. He once said, I try to invest in businesses so wonderful that an idiot can run them, because sooner or later one will. 2. Check the price. Just because a company is great doesn't mean you should buy it at any price. You want to buy when the stock is on sale. This means the stock price is lower than the company's real value, or what's called its intrinsic value. You can estimate this by looking at the company's earnings, assets, or growth. 3. Be patient. Value investing isn't about getting rich quick. Sometimes it takes months or even years for the market to realize a company's true value. But when it does, the stock price can go up and you profit. Buffett says, the stock market is a device for transferring money from the impatient to the patient. And 4. Stay calm. The stock market will have ups and downs. Value investors don't panic when prices drop. They see it as a chance to buy more of a good company at even better price. Let's be clear, value investing is not gambling because it's based on logic, not luck. And here's why. First, you control the process. In gambling, you can't control the outcome. In value investing, you control what you buy, how much you pay, and how long you hold it. You are making informed choices, not random bets. Second, it's about the long term. Gamblers want instant wins. Value investors are in it for years, building wealth slowly and steadily. It's like planting a tree. You don't expect fruit overnight, but you know it will grow if you care for it. And third, you reduce risk. By buying undervalued companies, you are already getting a deal. Even if the stock price drops a bit, you are less likely to lose big because you didn't overpay. It's like buying that $100 jacket for $50. You are already ahead. Ready to try value investing? Here are some easy tips to start. 1. Learn the basics. Read about companies and how to read their financial reports. You don't need to be an expert, just understand what makes a business strong. 2. Start small. You don't need a lot of money to begin. Even $100 can get you started with a few shares of a good company. 3. Use simple tools. Websites like Yahoo Finance or Google Finance can show you a company's earnings, stock price history, and more. Start there to find undervalued stocks. 4. Think long term. Don't check your stocks every day. It will stress you out. Focus on the company's value, not the daily price swings. And 5. Learn from the best. Read books by Warren Buffett or his teacher Benjamin Graham. A great one is The Intelligent Investor. It's like a guidebook for value investing. So there you have it. Value investing is about being smart, patient, and disciplined, not gambling. It's like shopping for a deals, doing your homework, and waiting for the rewards. You don't need to be a genius to do it. Just follow the steps and stay calm. If you found this helpful, give this video a thumbs up, subscribe to Stocks for Beginners, and hit that bell so you don't miss our next video. Please drop a comment below, tell me what you think about value investing or what topics you want me to cover next. Thanks for watching.